they're going after is critical infrastructure, and really, semiconductors is of national security importance. And that's why this is, from going from reciprocal tariffs to sector tariffs. And when you think about semiconductors is almost 12 to 15% of global trade. So this is like as big as anything it can get in terms of global trade. And you want to study the supply chains because, if you're importing laptops, it's very different because it's an end product, whereas semiconductors is what China is importing in turn. So, the supply chain aspect is critical because China is exporting rare earth, they're importing chips, and once you know exactly where the key kind of pain points are, and TSMC is definitely one of them because they are the ones who are the manufacturing hub for advanced nodes. That's when you work on those companies, which is what they did with NVIDIA and TSMC announcing yesterday that they are setting up this facility for AI supercomputers. And then you expedite the permits for those type of companies. And I think that's the approach they're going to take going forward compared to the blanket tariffs, the reciprocal tariffs that came.
So you mentioned NVIDIA, but talk a little bit more specifically about NVIDIA. It's still one of the biggest companies out there, and it really sets the tone for sentiment when it comes to the AI trade and, in some respects, the broader tech trade. So where does this leave NVIDIA potentially, this probe?
Yeah, so I'm thinking, the supply chain for NVIDIA servers is very different from a supply chain for Apple smartphones, for example. And, a smartphone has thousands of components, whereas a server has, to an extent, fewer components than what goes inside a smartphone. So when you think about giving companies incentives to relocate their complete supply chain, it has to come from NVIDIA as the company or Apple as the company that really creates the product, using a global supply chain. And I think that seems to be a much more practical approach in terms of bringing manufacturing back, because that's the end goal, reshoring of all these products here in the U.S.
In terms of national security, the New York Times had a great story during the Biden administration about how NVIDIA kind of got around the rules and actually was selling these really high-tech chips to China, which then turns around and uses them for its military purposes, among others. Is the Trump administration going to be able to really clamp down on NVIDIA so that they don't find, ways through Singapore to get chips to Beijing?
Absolutely. I think that is part of this probe that is set up, is not just to look at the imports when it comes to the supply chain, but also the exports of restricted chips, the semi-cap equipment, the ASML machines that you need to, set up your fabs. So clearly there is that aspect in terms of figuring out how they were able to get around the export restrictions and what that means in terms of their ability to, create chips for training LLMs, like DeepSeek controversy, where how many NVIDIA chips did they have access to. So all these things, I think, are part of this probe, and that is what will determine how they kind of work around reshoring some of the manufacturing for these products.
A rush of trade news has fueled volatility in NVIDIA in April. As President Trump announced a 90-day tariff truce for the majority of countries, NVIDIA's shares surged 19% on Wednesday, marking a historic rise. But Trump followed that up by increasing tariffs on China to 125%, after that nation imposed tariffs of 84%. Trump, however, lifted the high tariffs on semiconductors on Friday. However, he said that no one was getting off the hook on Truth Social. In roughly a month, sector duties on semiconductor imports will be implemented, according to Commerce Secretary Lutnick. According to reports, the Trump administration was using the Trade Expansion Act to look into semiconductor imports. According to the statute, the president may apply tariffs to products that are thought to be essential for maintaining national security. On Wednesday, the Federal Register will publish notice of the probe. NVIDIA, meanwhile, declared its intention to manufacture all of its AI supercomputers in the United States. The company's blog adds that it has commissioned more than 1 million square feet of production facilities to develop and test NVIDIA Blackwell chips in Arizona and AI supercomputers in Texas. In 12 to 15 months, mass manufacturing is anticipated to increase. On Monday, shares reached the 21-day moving average, and on Tuesday, they slightly increased. Does that indicate that it's time to purchase or sell NVIDIA stock? Trump also postponed a proposal to impose additional limitations on NVIDIA's H20 chips on Wednesday. For the time being, NVIDIA complies with rules while exporting H20 processors to China. So, what implications does this have for NVIDIA stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Good news is being in the telecom industry. The telecom industry has always been seen as a defensive play. We're a very resilient industry where our growth drivers are usually driven by bare necessity. You require connectivity to run data centers, to run this network, businesses, all the way to social usage from consumer. So we're still seeing strong growth across all our footprint and our markets. We've gone through supply chain shocks in the past during COVID. I think this one is slightly different. You have the US, which is a big market, suddenly raising barriers to their suppliers, which are usually Asia-based. A lot of the technology we import, whether they're developed in the West or in the East, actually we import it directly from the suppliers. So actually we don't see a major impact on supply chains in terms of chips, in terms of network equipment for telcos in general. Where we might see an impact and where everyone is sort of holding and bracing to understand what will be the exact implementation is the AI diffusion rule. And how will this apply within the second half of this year? Which countries land in which tiers, and how does that give access to these chips?
So expand on why you're so concerned about that right now, and how could that potentially impact Ooredoo and Qatar?
So we've been very lucky, and at the forefront was Ooredoo. We were one of the first, if not the first, telecom operator in the region to become an NVIDIA cloud partner. We actually received the first batch of, and that happened mid of last year. We received the first batch of NVIDIA GPUs actually earlier this year. We're in the stage of implementing them and embedding them within our own data centers in Qatar to service first the local demand. We're seeing very strong demand, but now, as you know, the US has issued the AI diffusion rule, classifying countries into different levels in different tiers, tier 1, tier 2, tier 3, and depending on that, that will determine how much chips they can actually import at a sovereign level. And then, of course, every player. We are very well positioned because we're an NVIDIA cloud partner, we're a preferred partner, and this will allow us to deploy these chips faster. We already have batches coming in before this rule is implemented. But this rule also goes into a world where every country is trying to develop what you call sovereign cloud and sovereign AI. So everyone will require some level of localization of these chips. So how these two interplay can be actually an opportunity for Ooredoo.
Okay, but the concern is that the business is still very reliant on foreign chips and at the whim of the Trump administration, which is very happy to change US export controls at the snap of a finger.
That is very true. So as we said, we try to front load as many chips as we can. We already have our business in Indonesia, which is running the latest standard of chips. In Qatar, we received the first batch. We pre-ordered some other chips for our operation in Qatar, and we're looking to deploy them also in other countries where we operate, namely Oman and Kuwait. These are our areas of priority. We're ramping up also data centers expansion and connectivity because they all go into play. But yes, if there is a change of rule, it might have an impact. But going forward, we've rarely seen retroactive changes of rules. So what will be in play, installed, will always give us a head start, as we're one of the first operators in the region to have access to these chips.
Indeed. So the other issue here is you've raised over $500 million for this big push into data centers as well. Is what you're seeing in the United States now changing the investment case or the geographic build out of that data center expansion?
Not at all. It actually has little influence. We're seeing significant expansion on the data center demand. You have to remember that around 30% of the world connectivity flows through this region. actually 90% of the connectivity between Europe and Asia flows through this region, and this requires assets on the ground. Plus, every country, whether this country, the UAE, Qatar, Oman, Kuwait, we operate in, have quite stringent data localization rules. So a lot of the demand is localized and it's growing. We just expanded our facilities in Qatar, QDC5, which is housing Microsoft Azure and Google. We're already expanding them. We'll probably be tripling the installed capacity within the next 3 years, just facing the demand, and we're looking to expand to at least 120 megawatts before 2030. And we're not seeing any slowdown, and this is just on cloud-based. This does not even touch AI demand. However, AI scales up depending on the AI diffusion rule.
There is a lot of uncertainty surrounding semiconductor stocks as the first quarter results season approaches. However, according to a Wall Street analyst, companies like NVIDIA that are exposed to the artificial intelligence megatrend seem to be in the greatest position. In a client letter sent late Monday, Oppenheimer analyst Rick Schaefer stated, "We see AI as the best, safest growth vector against a noisy macro tariff backdrop." Schaefer's top choices were NVIDIA, Broadcom, Marvell Technology, and Monolithic Power Systems. He predicted that many chip makers will report improved Q1 results as a result of tariff-induced pull-ins. Their counsel will be constrained, though, by the trade war's unpredictability and their general lack of visibility. At least in the short term, we see limited direct impact on AI spend, he continued. At the moment, semiconductors are exempt from President Donald Trump's tariffs. Chip tariffs, however, are being considered. Additionally, a 20% duty was applied earlier this year to Chinese imports of smartphones, PCs, and other devices that employ computer chips. They are not subject to the considerably higher reciprocal duties on Chinese imports, though, as of last Friday. The end demand for consumer goods like PCs and smartphones is most severely impacted by tariff-related price increases, Schaefer stated. The PC and phone markets are predicted to be flat this year due to pre-tariffs. Taiwan Semiconductor Manufacturing's Q1 report on Thursday marks the beginning of the semiconductor stock earnings season. Next week, however, there will be more activity when Texas Instruments, Intel, and others report. Prior to the earnings season, Schaefer reduced his price projections for 5 chip stocks: Veeco Instruments, Analog Devices, Marvell, Monolithic Power, and NXP Semiconductors. With a price objective of 175 for NVIDIA stock, he reaffirmed his outperform rating. During today's stock market morning trading, NVIDIA's shares increased by over 1% to 112.16. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now let's dive into today's video.
Have you expressed these concerns to your partners at NVIDIA?
Oh, we're in constant touch with all our partners, at NVIDIA, also the vendors, the manufacturers, the OEMs. Look, there is quite a bit of uncertainty and worry. I think all of these players have gone through shocks, and COVID was a major shock in the past. There was the chips restriction a bit before on Chinese. We've gone through this motion a number of times, so we're quite used to it. We're not in panic mode. We're actually planning for them. Also, telcos, given it's a critical infrastructure, we're heavily regulated, and we've been used, dealing with changing regulation is business as usual for us.
So what scale of capital can you actually commit to this AI and data center rollout given this uncertainty? I asked you before if any of this changes the math on your investment, but is it still all systems go?
It's still all system goes. We're still committing roughly at least $1 billion of deployment over the next few years to triple our capacity. All our capacity build out, we're not doing the opportunistic approach of let's build and they will come. We only build when we have anchor tenant. We're a major partner of all the major hyperscalers, whether it's Google, Microsoft, Oracle. The problem we have today is we can't build them up fast enough. So it's a good problem, still a problem because you can't satisfy fully demand. So we're not seeing any slowdown on that front.
Walk me through the overall landscape here as well, because as you and I have spoken about in the past, the global hyperscalers like AWS, like Microsoft, have all been doubling down in the region. You're working with some of them, but how do you differentiate in this space? And given the fact that margins are also quite thin in the data center business, what is the pathway to profitability for that business unit?
So it's a long-term profitable business. We actually counterbalance this with our consumer telecom business, which is slightly more volatile, slightly more unpredictable, but a huge free cash flow machine. So when you overlay infrastructure in general, and it's not just data centers, and that's our differentiation, you are able to overlay long-term predictable dollarized revenue streams. Where we differentiate ourselves is we're basically the most diversified operator in the region. We operate in 9 countries around the world. We have 160 million subscribers, but we also operate out of the most countries in the Middle East. We have the most landing stations. This is where you connect the cables internationally as a footprint. You know, we connect Qatar, Oman, Kuwait, Algeria, Tunisia, Iraq, Palestine. That's just in the MENA region. But where we also differentiate ourselves is these data centers, they don't exist in a void. You need connectivity, and we've been building up and investing significantly into international connectivity. We just announced FIG, which is a new cable which is connecting the whole Gulf region, starting in Oman all the way to Iraq. That cable by itself will have more capacity than all the existing cables which are already embedded in the region. On the seafloor, it's also to new standard. It will be buried, so much more resilient and secure. But we're also building now, using our footprint, to start building land routes, to go away from the Suez Canal, the Red Sea, which are being saturated hot points. And we're trying to build land-based route going directly from Iraq to the Mediterranean. And this is a very valuable alternative.
Going out on a limb here, but how much of that is also in response to the security issues that we see in the region and the potential to have some of these infrastructure assets being targeted by bad actors?
So a lot of the demand, the security measures we're putting have come from disruption to the services. They're not always nefarious. These cables, a lot of these cables have been built in the past. They were just laid on the seafloor. A dragging anchor could just rip one of these cables. There've been very little new cables built in the last few years. At the same time, what you see is data capacity and data demand has grown nearly by 30% every single year. So these networks are saturated. You need more capacity, more resilience, and more diversity. And Ooredoo, thanks to our footprint, we're one of the sole providers that can provide that whole diversity. And we work with peers around the region, whether it's STC in Saudi, EN here, to create that network.
Biggest risk as it stands for the rest of the year, as you see it? We've spoken a lot about the, I guess, uncertainty around the US administration's current approach to trade and tariffs, but what else sits on your risk list right now?
So strangely, the biggest risk will be probably oil price. Our footprint, if you look at it, operates mainly in commodity-driven economies. And as you know, telecoms is a factor of GDP growth. As the GDP of a country grows, telecom usage grows. So if we see persistent drop in commodity price and oil prices, that might have a long-term effect towards the end of the year on our business. But as of today, the guidance we issued at the beginning of the year, we remain committed to it. We believe we'll continue on our trajectory of record year after record year. We're still committing to at least 2 to 3% top line growth and increasing our profit margin to the mid-40s. So we're still very confident.
Along with its acquisition of Lepton AI Inc., NVIDIA recently announced a partnership with Quantum Machines to further research into quantum computing, which could have contributed to last week's 14% rise. Other partnerships, like those with Chasm Technologies for AI workspaces and FluidStack for exascale clusters, demonstrate NVIDIA's ongoing growth in computing and AI. NVIDIA's price increase is consistent with the general rising trend of technology companies in the market, which have benefited from tariff exemptions on tech products. Despite market turbulence, NVIDIA's calculated moves strengthened the overall upward trend. NVIDIA's recent alliances and acquisitions, which include partnerships with Uber, Toyota, and Quantum Machines, could strengthen the company's position in artificial intelligence and quantum computing. These programs provide credence to the larger story of NVIDIA's expansion across a number of industries, such as data centers and automobiles. By placing NVIDIA to take a bigger chunk of business infrastructure investments, the company's emphasis on Blackwell architecture and AI scalability might boost revenue and margins. According to current projections, these partnerships might provide predicted earnings of around US $159.1 billion by April 2028, with analysts projecting yearly revenue growth of 20.4%. However, margins are anticipated to be somewhat impacted. When dividends and share price increase are combined, NVIDIA's overall shareholder return over the last 5 years has been quite high, demonstrating its notable expansion. Over the past year, NVIDIA's performance has outperformed the market, outpacing the 4.8% return of the U.S. market. Although operational and regulatory obstacles still pose a risk, the share price's recent increase is consistent with both NVIDIA's strategic moves and a larger industry trend. Even with the recent surge, NVIDIA's share price is still trading at a significant discount to the consensus analyst price estimate of $169.47, indicating potential for growth if anticipated revenue and profitability turn out as planned. Investors should, however, take into account risks that could affect long-term profitability, such as regulatory concerns and Blackwell system expenses. It will be crucial to match these advancements with upcoming earnings projections as NVIDIA keeps growing its technological footprint in order to move closer to the analyst price goal. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
And we are watching some of these key levels. Nice to see 5,400 rather than last Monday's lows. I think some people would appreciate that, not all, but some. Some of your thoughts on the levels you are watching, Kevin. Good morning.
Yeah, how you doing, Nicole? Yeah, if you're looking at the longer time frame, we're still kind of hitting the upper end of this resistance zone here. That's exactly where we rejected at yesterday and kind of closed a little bit lower. And this is where we're pretty much having a little bit of a battle here today. If you're kind of looking at the longer term time frame, we've had three, bear flags kind of showing up, meaning that we had counter trend rallies to the upside before we actually started to fade. And I know that we've had a lot of enthusiasm. The sentiment has kind of shifted here, but from a technical standpoint, we're still a little bit cautious here, trying to reclaim that 20-period moving average, sitting at around 54.94, and then also trying to get above and try to at least touch that 200-day moving average, which is sitting at around 57.30-ish or so here. We still have a gap to the upside that we want to be able to fill. We did see that death cross, that 50-day moving average, closing below the 200-day moving average. It's something that you're going to have to see develop. It's not always a signal that the market is going to correct even further, but it is something that if you are in a bear market, could signify the beginning of the potential downtrend or the last downtrend or wave within a particular cycle. Now, this morning, what is actually very bullish here is the MACD is crossing that 12 EMA is above the 26 EMA. You're seeing market breadth expand. You talked about the sectors that are performing. It's pretty much across the board, whether it's defensive, if you're looking at utilities, or if you're looking at financials on the rate front, or if you're getting a little bit more speculative and you're looking at information technology. One thing I do want to kind of note that a lot of this outperformance this morning, Nicole, is actually coming from the semiconductors. The SOX index right now is up about 1.2%, and NVIDIA is skyrocketing higher right now, up about 1.72% so far. So that's going to be a key driver if that trend is going to hold. On an intraday basis, what I'm looking for to the upside, your first area of resistance, 54.50. Next one is going to be 55.15. Let's say 5,500, 55.15 to the upside here. We have any type of further breakdown, you want to be able to hold 53.65. If not, you're looking at 52.60. The range is still wide, but it is coming in. As you talked about, the volatility index, or the VIX, or implied move of the S&P 500 is crushing here a little bit, getting below that 30 level so far. And that's the direction you really want to see over the next couple of trading sessions, to give maybe bulls a little bit more confidence that they can try to break up above that resistance level that we kind of talked about earlier.
I almost had to rub my eyes when I saw the 2 handle on the VIX, by the way. Because I feel like we went up to 60 and we've had just such a wild ride. We haven't really seen the 20s too much. Talk about the Treasury spreads, the long end always in focus. What is it that you're watching for today?
Yeah, still keeping an eye on that this Treasury spread, the 10-year minus 3-month spread, and really trying to give us a little bit of a direction. It has been a leading indicator for the S&P 500, and I would think that it's going to continue to do so. We did see a nice little pop to the upside. It kind of broke this triangle formation, if you will. And if you continue to stay positive, I think that's going to be good for equities. If you start seeing that move back to the downside or close to an inversion where that 3-month is at a higher yield than the 10-year, then I think that's also going to put some pressure on equities. If you kind of just take a snapshot from yesterday's close to this morning, you would say, okay, the 10-year is still not doing much, but overnight we are still seeing a lot of volatility within the 10-year rate structure. Not only if you're looking at the 10-year futures, the bonds, or if you're looking at the rate futures, which is obviously showing you the rates here. So still a little bit of volatility there, but it seems like it's come in a little bit, and we still want that direction to move up. You want that normalization. You want the 10-year to be higher than that 3-month Treasury for now. That's something to kind of keep on the radar here, because the technical structure, if you're looking at the weekly chart for treasuries, does kind of signify that prices are still potentially going to be in a correction mode to the downside, meaning yields move a little bit higher, which is fine, Nicole, if the 3-month or the 2-year is also doing the same in the same type of fashion, keeping that spread intact. If you don't, that's where you get this kind of disconnect or this disjointed market in treasuries that makes it a little bit more concerning when it comes to equities for right now. But once again, the equity's looking like they're trying to recover here. I wouldn't give an all clear signal yet until we really break some of these key levels to the upside, but we're going towards the right direction, at least for now, until we get up to the mega cap names when it comes to earnings, and we'll see those over the next couple of weeks.
All right, so we'll make sure it doesn't change direction on us. And then the VIX, you're watching that. Anything that stands out to you today?
Yeah, I mean, if you're kind of looking at it, that move that you talked about, a VIX at around 50 to 60 was a 7 standard deviation move, meaning that it rarely ever happens. We had the fourth highest elevated VIX that we've had since the index has been published here, and rightfully so. It is a mean reverting type of indicator, so we should see a crush here a little bit. Now, technicals are not the greatest when you're looking at the VIX. I'm not really a fan of it, but if you kind of look at the RSI, it's actually a pretty decent indicator, and that means that we might have a little bit more to the downside when it comes to the VIX, which should be conducive for equities kind of moving higher here. But once we kind of get back to around that 21-ish area, that's where you get a little bit concerned that maybe we do see a little bit more of a re-rating. Once again, direction right now is to the downside, equities to the upside. That's a good correlation here. But I don't think we're fully out of the woods yet for the VIX. Doesn't mean that we have to get back to 60, but we could have an elevated VIX where premiums are still fairly expensive, especially when you're looking at downside skew or put skew. So once again, be on the radar for that. Still be a little bit tactical here. I don't want to think that we're in the all clear here. Technically, it seems like the S&P 500 might have some more room to go to the downside here, but not until we potentially probably hit that 5,700 level. That's where I would think shorts might step into this market and try to knock it down once again.